Hey guys, quick question or something to say. Yesterday, I didn't mention the topic. I even said in the video I wouldn't talk about it today. Drop a comment so I can see how you're doing. If you have questions, ask them. I'll try to answer because picking one at random, hope you're having a good day. Someone wrote, I memorized today's words a lot, but honestly, you all just copy pasted them. That's pretty lame, admit it. Yeah, it's kind of lame, okay? Even if you did it yourself, it's not a big deal. I wasn't going to say this, but as your friend, I'm telling you, when you all get together, you joke, mess with each other, that's it. Someone comes in, I don't even know what's going on. Guys, I got a promise from Saman that the exchange rate will be live for you next time. When Saman sees this, he'll say, if what exactly do you mean? Could you please clarify? On the condition that it gives an entry opportunity, as long as we don't give it to these Arabs any more than this. Up to 112 is okay, no problem at all. But for this entry trigger to be good, or for the next wave to have a cool entry trigger so we can track it right here, it's better if I move this risk. It's better not to come below 113,326. It's better not to move below this level and not to come down here. I had forgotten. Why was this edited? What was your question here? This workspace is still here, so I'm organizing everything here. How many hours have we been working? How are we working? How are the guys working? What time did it get messed up? I made a video for it, for this space, for the kids, 2 minutes of breakout spots. Today, too, there will be a few minutes of breakout spots there. Sometimes you get surprised that my situation is more about breakout spots, so that we don't go below 139 on the breakout spots. The reaction to this level, with no pattern at this level, the uptrend starts, for example, as we head toward US market time, we should see an increase in volume in this candle. You can open a position earlier than the breakout of this 116 from F72. I talked about this here yesterday. For now, if someone has already opened a long position here, I'm saying this isn't it. This isn't the trigger. Here, if you want to open a position, the stop loss becomes so big that it doesn't make sense. For now, let's wait and see if there's a reaction. After that, at the level where the reaction happens, let's see if it breaks through. It needs to have a crazy increase in volume, but we haven't seen that yet. Now, as it comes here, the volume is decreasing. Look, the green candles, each one, their volume is dropping. So what about this? First of all, this move actually started from here, from a profit zone, for example. Second, we have a type of data called PERD data. We treat PERD data like this. We remove it when now, on the 15-minute chart, if we go above 114.493, I'll remove its line because we won't need it anymore. If we go above this level, we can't take an early entry trigger unless we come back and retest it once more, then make a higher low. Why? Otherwise, it's not really a great trigger. You need to get a second green candle to confirm the volume increase, and then you can open this position. I mentioned this, so keep it in mind in the Bitcoin space. Now, let's move down from the higher time frame. Honestly, if you look at it this way, the monthly range is kind of hilarious. I mean, imagine for a whole month you've made everyone suffer, and in the end, there's no difference from the previous month. I don't know if you see the comedy in that or not, but it's really ironic. Let's close it and see what happens. Keep this in mind for Bitcoin. Looking at the monthly chart, it's ironic how after all the ups and downs, nothing really changes. Let's see how this month closes. Last week's candle looked bearish. It's a game, and buyers are back too. The battle starts from scratch. You can't just call it one-sided or say sellers and big players dominate just because of a red candle. The first drop was only a few days ago, and there are still 20 hours left. It's too early to talk about the weekly. On the daily, there's just one red candle. You can't just say this candle isn't good. The volume is high, but that was expected. There's been a lot of talk about this level. The price has dropped this much. It tried to come back up, but then it got hammered down again right here. Obviously, this level is going to be really important. The price has dropped this much, tried to come back up, but then got hammered down again right here. Obviously, this level is going to be really important. The price is going to react to it. Some people who had buy positions around here want to exit at this point. They see it as a chance to get out. We had a bullish trend here at first, up to this level, and there was volume at its high, which I talked about. I remember. Previously, buyers were absent at this resistance. Now, with market indecision, set your stop loss and ignore trade volume. The volume increased, but during the correction it didn't decrease, so we can't say buyers or sellers are stronger. I can't say which side is stronger. So what should we do? Let's wait a bit longer, maybe break a little further and come down to a lower level. In this downward move, we don't have much volume. That means the sellers want to stay in the game, and they have strength too. It's hard to tell which side is stronger. To get more clarity, we could check a lower time frame. The recent drop had low volume, suggesting sellers are still present but losing momentum. This might mean weakness or that we've hit a support level. My guess is it could be a sign. It could be a sign that we've reached a support level. For now, I'm waiting to see if buyers will step in or not. If they do and manage to push the price up, what should you do? Wait, set an alert at 114.526. Set your alert, and when it goes off, come and check 4 times. If this moves upward and the increase is strong, you can consider entering. No, you don't want to open a position here yet. Wait for the breakout. Once you hear the alert, then you can open your position at 22.22. You open your position. What about a short position? Now, in 4 hours, let's take another look. If it breaks here, then it gives us a short position. But as long as it's above 112,000, with the current chart structure, a short position doesn't really make sense. For example, if we say from here to here is an upward trend, up to 111,524 is just a 50% Fibonacci retracement. That's just a 50% Fibonacci retracement, okay? So, it can go down to that level before a new trend starts. Because after that, that's when a strong downward trend could begin. People are still in a selling mode. People are still afraid of selling. They're still holding onto their short positions. So if an opportunity comes up, which means there is a chance for a favorable situation or a profitable deal, there are a bunch of people who are ready to sell. These people have been watching the market and preparing themselves, so when the right moment arrives, they are able to act quickly and sell their assets without hesitation. Now we've had a bullish trend, and in a bullish trend, the corrections get shallower. It's not going to correct all the way down to 50% for you anymore. It'll correct about 38% for you, and it's already moved into its second wave, the third Elliott wave. The second wave is here, and now we want to consider this as the first wave. We need to be careful here, so we respect that selling pressure. That's why we don't rush to open a short position here. We don't do that, because this could just be a correction in the trend. If it bounces up from here, that's different from when it drops after getting rejected. Here, we've got a double top, and the chart itself, even on lower time frames, clearly shows us the trend. Plus, we've been rejected from a very important resistance level, so a short position. This poster and all that will go up for the live session. I'll post it on Telegram for the live, and the time will be announced for you. But first, our main thing is the interest rate. The interest rate here is from Bitcoin, meaning if it drops below this level, you don't do anything. No, you definitely don't open a long position either. Not at all. Live session on Telegram. Topic: MIT interest rate. I'm not taking any action yet. I need to decide whether to close my short or long positions, but for now, I'll keep them open. The current market movement is just ranging, so there's no benefit for us at this moment. For example, let's say here Bitcoin wants to break this level, 114,533. It showed some action, and now it wants to break out again. At that moment, if Bitcoin dominance was at resistance here and showing a green candle, you'd open a position on Bitcoin or on a coin that's paired with BTC and is bullish. If it wasn't, and it was showing a red candle, then again, it's better not to open a position on Bitcoin. Instead, go check out the altcoins or see which tier. Right now, it doesn't really have a clear overall trend. Basically, all you can say is that, oh, this uptrend is weak, it's just a correction after that drop. We can play around a bit here, but staying here could mean we're doomed for another drop. That's pretty much all we can say about it for now. In terms of timing, for example, it could stay in this range for 15 or 16 days. It's all about whether it breaks these levels, then we can say, okay, this is a correction, or a new bullish trend could continue. For our friend here who wants it to drop, it needs to break 59.54. For our futures position that we want to take on a lower time frame, that level is important and useful for us. It also needs to react at 59.30. It should make a lower high and move sharply. If it just messes around and tries to pass through, it doesn't make sense. It needs to move sharply. There really isn't any significant support here. There's no support here. On the weekly chart, this area must drop fast to 57.6. Otherwise, a big drop isn't likely. Are you watching dominance or total? Both charts look like Bitcoins, but they were rejected earlier at resistance and pulled back, which makes sense. Why? Because dominance hasn't dropped. When Bitcoin is profitable, it leads total. What about total 3? There's an important resistance at 1.35. That's the main one, and during the pullback, it hit 1.39. Well, this shows that for now, altcoins are one leg behind compared to Bitcoin. Looking at the Ethereum chart, I realized that the sum of altcoins is one leg behind, one resistance behind. The trigger zone is at 1.35, yes, and it could also be at 1.36. At this point, it's just a trigger. It's a confirmation for whether you should open a position on altcoins. What does this mean? It means you shouldn't open a short position here. In terms of the chart's position, it's not bad. It's not in a bad spot. We tried once to go up, but the buyers didn't have enough strength. Even on the 1 hour chart, we made a lower high. There's a bottom here, but it's not a breakdown yet. It could be the first wave of a drop. If this support breaks here, it could give us a short position, but I'm not opening one yet. Why? I already explained it. I'm giving this level some respect until it's clearly broken. I'm giving it some respect. Before, we opened a short here, then we opened a long here, and we followed through with that. Now, if we enter a bit later, it's not a big deal. By respecting this, our structure becomes more complete and correct. That's my reasoning. The news is very close, and there's a high chance they'll lower it. Most likely, at first, they'll reduce it and we'll see a red candle in the market. Overall, the effect is positive, it benefits the stock markets. But the overall impact still depends on how Powell comes out and talks. It really does depend, but there's a chance this could happen. At first, we might get a red candle, a red bar right at the start. But that doesn't mean, oh no, the news is bad for the market. Not at all. A rate cut is actually good for the market, whether we like it or not. Just pull the money at that level, our 1.6 trillion, 1.56. Ethereum gives you 1.56. For other values, check the total. Bitcoin's share hasn't decreased because dominance hasn't dropped. The rest of the altcoins move along with it. The total amount of money coming in here, the total amount that needs to come in, is in this total. For Bitcoin to reach this peak, more money has to come into the total because the smallest share of it is going to Bitcoin. So, if Bitcoin dominance is dropping, since it's taking a smaller share of the total, even more money has to come into the total. When Bitcoin less money is needed for Bitcoin to reach that level again. Since Bitcoin's dominance hasn't dropped, it's taking a larger share of the market. Less money is needed for Bitcoin to reach that level again. Pay attention to market structure with dominance. It's important to understand, not just memorize. In my video, I explain this and the relevant ratios. It was like kinematics, where there's just one formula for motion, just move. Feek is like those formulas. It's like kinematics, where there was just one formula for motion, and we didn't really have acceleration or anything, but then there were hundreds of other versions. Sometimes time was unknown, sometimes distance, sometimes acceleration, sometimes initial velocity. This is just like that. From one formula, you can get all of them, and it's better not to memorize them all separately. Don't go around saying 5, 15, 25, 35, and so on. If we break through 4.72, especially if we do it as soon as possible, like if we do it today, it shows just how strong our downtrend is. And if we break 4.72, we can move toward 4.46 or 4.47 in the next wave. We can do this. Returning to this box would be like a heroic comeback. So, it's like coming down from above, with the bridge and absence and all that. I'm not saying go and open it right now, but for example, when it was here and about to break this, you should have gone and opened it. Put a garland on its neck. As others come down, watch the market. When 470 is about to break, open a position so you're not left out. I told you this yesterday. I analyzed those things, the top 10, and yesterday I put them on your watch list. Go spend some time and check them out. They still have positions. Nothing has changed with them. Really, go follow up, spend time, see if you can open a position. Still, 36 to 68 is in play. It's important. The word again, it's live, IT, NCT. Look, if you're wondering why you're currently paying attention to the 4-hour chart right now, and not, for example, saying, on the 1-hour chart, we made lower highs here and broke the support, so the trend is down. If you're wondering why we focus on the 4-hour chart instead of saying on the 1-hour chart we made lower highs, broke support, so the trend is down, the Sports City Strategy video series parts 1, 2, and 3 cover this, identifying trend direction. We teach you how to determine the trend direction there. Watch those 3 videos and you won't have this question anymore about why I'm doing this now. Before you continue with this video, I encourage you to take the time to watch those 2 or 3 videos that make up the 3 main parts of the series. Each video is designed to help you understand a different aspect of the topic, and watching them in order will give you a clearer and more complete understanding. The first video introduces the key concepts and lays the foundation for what follows. The second video builds on that by exploring more advanced ideas and practical examples. The third part brings everything together, offering insights and tips to help you master the material. By watching all 3 parts, you will ensure you do not miss any important information and will be better prepared to continue learning. So please make sure to watch those 2 or 3 videos, those 3 parts, before moving on. I got it for myself, just a bit, to think about it. I call these fake moves. The key point is this 40,090 price faked it. From those 3 demand zones, the buy didn't happen, price faked it. In higher time frames, yes, at this price, it faked it. In the 4-hour chart, it got rejected there, not faked. If you go higher, yes, in the 1-hour chart, this area closed with a candle for us and made no move. We wouldn't have opened a position here, and we discussed this together. That, hey, it's going to show some reaction to give us a point, to give us a trigger point. It's from yesterday, we can see it. The result is a detailed 4-hour chart, specifically prepared for you on the cryptocurrency Ethereum for your reference. No trade on 1 hour, 4-hour as expected. Follow up so you can get confirmation from the higher time frame that the correction is over and the trend is about to start, or that on the 15-minute chart you can catch an early trend reversal in this downtrend. It's on the 15-minute chart where the stop loss can be smaller. Don't expect anything special to happen on the 1-hour chart today. Build your foundation today, and these 4-hour and 41-minute positions are for the 15-minute chart. Use the 15-minute chart for early signals and smaller stops. Confirm trend changes with higher time frames. If a bullish candle forms and moves up, from here you need to track its volume increase. If you can spot the volume increase earlier, before the breakout happens here, that's even better. If these things happen on the 4-hour chart, it means we have a really good engulfing candle, and your stop loss will be set below it. The next resistance is up here, so your stop loss will be close, maybe around 3% or 3.5%. The position opens at 3, and the profit is really good for this. That was the last word I had. Thank you so much for staying with the video up to this point. To sum up, guys, yesterday we were waiting, and I said that those who don't have a position shouldn't open one, so the market can create these kinds of triggers and build certain levels for us. This is our last word. Thank you for watching. To sum up, yesterday I advised against opening new positions since the market can create triggers and levels, giving us reasons to enter, correct, or set stops. The market has done this, and as we near the US session, it means that expect more volume, the market should be busier then. Watch the chart and candles closely. If volume rises, consider opening a position. Track 4-hour and 15-minute charts. Before breaking new highs, open your position. Use a candle setup or a 15-minute strategy. DMI confirmation is needed. Using the high is preferred because a breakout is strong, making stops from the low large. This affects risk reward and can make securing profits harder if you wait. My preference has always been to get stopped out rather than miss out or not be able to secure profits. That's always my preference, because when I get stopped out, at least I know exactly what's going on. I know, okay, here I get stopped out. Here, I come and just take the loss. But in that uncertain situation, you don't even know. Did I miss out? Did I not miss out? Will it reach my target? Will it not reach my target? That uncertainty is always there. Have a good day and night.